trades you can take. Number one, investing. Investing is done on the basis of fundamental analysis of a company. It is usually done for the long term, usually for 10 years or 50 years. Fundamental analysis is done on the basis of looking at the company's fundamentals, which is financial information, the company's financial statements, how the company is doing the business, who is owning the business, who is owning the company, like shareholding pattern, etc., and all that good stuff. So, for investing, you need to do fundamental analysis, and if you are satisfied with the company's statistics and data, then you can definitely invest in that company. And if you want to do fundamental analysis and check out a company's financial statements, it is available on moneycontrol.com. I will link it in the description. It is one of the best websites in my opinion. So next we have positional and swing trading. This is done relatively for the short term. It is done on the basis of technical analysis, usually on a higher time frame, that is daily time frame or weekly time frame. So that means positional trading or swing trading is done for a couple of days, like 15 days, 20 days, and sometimes even a month. And the third and the last type of trade that you can do is day trading, which means you buy a stock on a day and sell it on the same day. Like, I do day trading a lot. I do day trading and investing both. So for example, I buy a stock at 100 rupees at 10 a.m. and by 11 the price was 105. So I sell the stock at 105 and keep the 5 rupees profit in my pocket. So that is what day trading is. Now, you must have heard that the stock market is too risky, you can lose all of your money, and you should never invest in the stock market. Now, let me tell you, if you're driving and if you are not driving properly, even driving is risky. So, every single thing that you do, risk is definitely involved in it. All you have to do is do it properly and with good knowledge and experience. So, how risky is the stock market actually? If your analysis is correct, if you are using logic behind your trades and investing, then you will definitely not lose money. You might be wrong sometimes, but in the long run, you're definitely not going to lose money if your logic and analysis is correct. So there is not much risk involved in the stock market if you have good knowledge, but if you are entering the stock market without knowledge, then that is the most riskiest thing in the world. Now, one of the most frequently asked questions is stock market gambling? And if not, how is it different from gambling? So let me tell you, gambling can be done by literally any person on, even on the streets. Like, someone can come up and gamble and win a few bucks, right? But stock market, not everyone can do trading or investing in the stock market. It requires a skill set. You do not need a skill set for gambling. And the most important part is risk management. You definitely cannot manage your risk while doing gambling. You either lose it all or you win. But in the stock market, you can have a good risk to reward ratio. That means you can risk less but win even more than that. So risk management is key in the stock market. If your risk management is good, you're definitely not going to lose money in the long run. So risk management is what makes gambling and stock market different. If you are investing or trading in the stock market without any risk management, then I'm sorry to say that you are gambling in the stock market and not investing or trading. So next we have, what do you need to begin trading or investing? Now the most important thing is knowledge. If you're entering the stock market without any knowledge or any base of knowledge, you're doing one of the most riskiest thing possible. You can lose all of your money. And the next thing that you need is a demat account. Make sure you open your demat account with a SEBI registered broker. I will link the broker that I use in the description box. It is SEBI registered and a well known